This, of course, in a couple hours ago. Quite interesting as well. The Dow tumbling 600 points, wiping out all gains this year. And let's go to New York for the latest on the markets there. Bloomberg's Jenna Dagenhart joins us live. Jenna, we're seeing more and more stocks move into bear market territory in the U.S. Walk us through some of these companies and how the overall indexes are doing.
Yeah, so Shahan, as of the last close, about half of the stocks in the NASDAQ 100 were in bear market territory from their peaks, and in the S&P 500, more than 200 companies of the 505 stocks were down at least 20%, including GE down more than 70%. And in terms of leading losses for market cap, we have Amazon. It's lost, shaken off $250 billion of its equity value from its peak. And it used to be a $1 trillion company. It is no longer. Same with Apple, no longer a $1 trillion company. And there are a total of 7 companies in the S&P that have lost more than $100 billion of market value from their peaks. And in addition to Apple and Amazon, we also have Facebook as well as GE.
Now let's talk housing. Is there a slowdown, and is it linked to the potential rate hikes?
Yes, so Shahan, we had a surprise drop in the U.S. home builders index. It dropped 8 points compared to a median estimate of only 1. And you're right, this does play into rate hikes because the slowing home builders, this report that we got, the group signaled this to policymakers as a potential warning sign for the health of the overall economy. And over at Bloomberg, we talked to our economists here, and they weighed in on this drop in home building, saying that they think this slowdown will be temporary and that it will not derail overall economic growth. So we'll have to wait and see, though, how this plays out in terms of interest rate hikes.
And then retailer Target has reported a sales miss. How does this earnings report impact momentum going into the holiday shopping season?
So Shahan, Target tumbled following a disappointing earnings report. It still saw sales growth of 5.1%, but that missed estimates, and Target is leading a $9.5 billion retail rout ahead of this crucial holiday season. And we're also seeing TJ Maxx as well as Kohl's and Ross. They fell following earnings, even though they did beat sales. So this is not really what retailers want to be seeing ahead of the crucial holiday season. We are seeing people showing up in droves to go holiday shopping, but these earnings reports are bringing retail stocks lower.
And speaking of holiday shopping, what trends are we actually expecting this holiday season, and Black Friday in particular? I know it's a bit crazy here in South Africa already.
Yeah, Black Friday seems to have already begun here as well, Shahan. And a big trend is growing e-commerce. And this could be the strongest holiday period in years, fueled by we have low unemployment rate and high consumer confidence. And eMarketer is calling for a 17% jump in online sales here in the U.S. And Black Friday is going to be a big part of that. As you know, it's quite a big deal here in the U.S. And 2015 marked the first year when we saw more shoppers online than in stores, and that trend really seems to be continuing. Last year we saw a 50% jump in online sales growth, although it's interesting when you compare it to Alibaba Singles Day. Alibaba Singles Day brought in $31 billion of sales this year, but last year when you look at online sales from Thanksgiving and Black Friday, it was only about $8 billion. So we still have a long way to go to catch up to Alibaba Singles Day, but things do seem to be shaping up to be quite a robust Black Friday shopping season.
Yeah, I really wish I could hide my debit and credit cards during the season, but there's no way that's going to happen. Thanks so much for that. Appreciate it.